Welcome to the Capital Spreads weekly look ahead. Today is Monday the 23rd of July 2012. So far this week we've started very much on the back foot. Serious risk aversion across all markets as the Eurozone crisis comes back to the forefront of investors' minds. We had over the weekend some pretty negative news flow. It all kicked off at the end of Friday's session with various parts of the periphery of the Eurozone looking like they're going to need further bailouts, concern that Spain will need a bailout directly for its sovereign as opposed to the banking sector, and bond yields for the likes of Spain and Italy spiking, in particular Spain's 10-year government bond yield hitting a record high. So serious risk aversion this morning. That means that the FTSE's down quite a bit. We're at around the middle of 5,500, so 5550. The Dow we're calling to open lower. It's around 12,690. The euro dollar, that's been lower than where it currently stands, below 121.00, but it's at 121.20 at the moment. Cable at 155.35. Gold is at 1570, and Brent, which has seen a little bit of risk aversion but certainly hasn't brought it back towards the $100 a barrel mark yet, it's at 103.80. This week there's quite a lot of things to look at, in particular from a corporate point of view. Lots and lots of earnings for FTSE stocks this week, interim statements, trading statements and final results. Try and cover a few of those. But today really very quiet, obviously apart from the big sell-off, but things are quiet on the economic data front and corporate earnings front. The only thing really to highlight for the economic data side of things is the consumer confidence from the Eurozone. That's expected to remain very much below its long-term average. So tomorrow, really the only highlight on a corporate front is Man Group, and then for economic data we've got French business confidence. We then have PMI numbers from Germany and Europe. Germany in particular will be one to watch. There the manufacturing number and services number is expected to just bounce a little bit, but for manufacturing expected to remain below 50, services just expected to head above 50. Then for Wednesday, lots of earnings. We've got ARM, we've got British American Tobacco, BT, we also have GlaxoSmithKline, Tullow Oil and British Land and EasyJet. So plenty of corporate data there to focus on. For economic data, it's the German IFO business survey. That's expected to decline for the fourth month in a row. We also get, and probably the highlight of this week, UK GDP numbers. They're expected to show once again that construction there is really being a drag on the UK GDP. When you look at the main components of UK GDP, such as manufacturing and services, if you look at those combined, huge employers of the UK employers, that is actually still growing. Generally, on the whole, surveys indicate that manufacturing may be struggling a bit, but services certainly is growing. Yet the headline GDP figure is expected to show a triple dip recession, which of course doesn't make great headlines, but perhaps the economy isn't quite as bad as the GDP numbers would suggest. That's expected to come in minus 0.3%. Then from the US we get new home sales. On Thursday, again lots of corporate data: AstraZeneca, BG Group, Centrica, ITV, Lloyds, Royal Dutch Shell, Rolls-Royce, Unilever and BSkyB all reporting. On the economic data front we get consumer confidence numbers from Germany, and then in the US, durable goods and pending home sales. And we finish off Friday, nothing really to report on the corporate data front, but for consumer confidence from France, that's expected to remain pretty flat. We then get inflation numbers from Germany, and we finish off with US GDP figures, which of course are expected to decline, and a University of Michigan confidence number. So lots of things to absorb this week, both the corporate data front, the economic data front, and of course we'll be looking very, very closely to how things develop in the Eurozone as to whether those Spanish bond yields will continue to spike. That's it. As ever, do give us feedback, media@capitalspreads.com.